Welcome back to another episode of Hoot and Poop. So in today's video, I just want to, kind of wrap up my sharing on Datadog. So in previous video, right, I have talked about what Datadog does, basically what it's all about. So in today's video, I will dive down into who are the managements, their financials, as well as their valuations. Okay. So as always, this is not any financial advices. It's purely a sharing purposes. So just please do not take this for any buy or sell recommendation. Okay, so that it's always important for you guys to understand what you're buying. So my purpose or my intention of all this sharing is more like to share with you guys my thought process. So that number one, it makes me more accountable for my own research. At the same time, I hope I can give you guys a different perspective of how I look at things for investing. All right. So moving on to let me move myself away. All right. So moving on to the management. Okay, we can see that firstly the CEO, right, is Oliver Pomel. So he started. He co-founded Datadog 11 years ago in 2010. Okay, so before he becomes the co-founder and CEO of Datadog, he was the vice president, all right, in terms of technology for this company called Wireless Generations. I actually heard before a podcast about him, or rather an interview done by him, saying that why did he start off Datadog, because he felt there was so many silos in terms of the data reading, like this team and that team are not talking to each other, and so he wanted to break down all these silos. So this is why he and his another co-founder formed Datadog. Okay, so that's basically about it. But if you look at all his background, you can tell that he starts off he's like the tech kind of person, where he started off as a software engineer in IBM since 1999, and then after that he goes all the way up to join Wireless Generations for a good 8 years, and then becoming the vice president. After that, he co-founded Datadog for 11 years. So in G's, Datadog has been with us for 11 years. Okay. Next, the second co-founder, which is Alexis. So likewise, he was also from Wireless Generation for 6 years. Okay, so during his time at Wireless Generation, he was in charge of live operations, architecture, as in software architect and stuff. So basically, these two are the co-founder of it. If you ask me, I look at it, is that yes, they do have some synergy in what they're doing. It's more like you don't get. It's more like I would be a bit concerned if the founder and the co-founders are non-technical persons, because they may not know what the customer wants, if you put it this way. Okay, so now next, the Chief Product Officer. Okay, Amit. He has been with Datadog for 9 years. Previously, he was a director for in product management for Quest Software. So basically, prior to his appointment in Chief Product Officer, he was involved in product manager, product management. So basically, he is kind of having various experience dealing with products as in his previous examples. Okay. We also have David, who is the Chief Financial Officer. So of course, for CFO, basically, I just want to know whether do they have experience as a CFO in his past few careers. So you can see that he has been, basically he has been CFO for all his career. So I'm pretty much okay about it. Yeah. So that's thumbs up a quick summary of what are management. So usually I will always try to find some synergy, listen to their podcast of their management, as well as to look at their earnings transcript to see whether if I can get any information out of it. Okay, so now next we need to know what's the financial health. So I extracted this from their later one of their presentations. So you can see that from first quarter 2018 all the way until second quarter 2021, the revenue has been growing up very, very nice. It's like a very nice uptrend. Okay, of course, non-GAAP operating income, they were loss making in the first place because they needed. But it's normal to me because they needed cash to improve and stuff. After which they went all the way up. So this personally, I think it's okay. Pretty much standard for most SaaS businesses. Now ARR is something that we always value, using that to value SaaS businesses. So it's called annual recurring revenue. So because the reason why we can use ARR is because for SaaS businesses, software as a service, it's more like, when you sign up for it, it's a recurring payment that you need to make to the vendor. So just for example, if you sign on to like Spotify, or if let's say you use Microsoft 365 and then you need to pay on a monthly basis, the amount of money you pay on a monthly basis maybe about, I think about $15 to $20 for Spotify, and about $150 to $200 or so for Microsoft, depending on what package you choose. But this is like a monthly bill that you need to pay. It's like a recurring standard fixed bill. So if you think about it, like from a user point of view, if you pay a few $10 over up to $20 over to a few $100 on a monthly basis, to use their services. So you think of it from a enterprise point of view, they are definitely not going to pay just $10 over or less than 100 on a monthly basis. They are definitely going to be paying way more than that, because you talk about corporation, you need to support how many thousands of staff in terms of their usage, in terms of their data. So from a corporation point of view, right, large enterprises, when any SaaS businesses that targets large enterprises, naturally the recurring revenue to them will be quite significant. And this is something that I, as an investor, we need to watch out for, because if the ARR is not going up, if it's decreasing, it means to say that there are more and more customers choosing not to use their products. Like for example, just a slight correction. Microsoft, I remember I paying about $150 per year, not per month, right? So if you think about it from our customer point of view, let's say we use Microsoft 365, and then all of a sudden, maybe perhaps Linux came out with their own, Word documents, Excel, etc. Okay, and then you start to realize that Linux actually has more features, better, cheaper, right, than Microsoft. So and if you start to see more and more people adopting Linux our product, the question is that there's a higher tendency for you to switch over, right? So if you look at it from this perspective, is that for large enterprise, it's the same. There are competitors everywhere. I'm not saying that it's not like a monopoly from Datadog, but they're definitely bound to have competitors. The question is that how then does Datadog retain their customers? So perhaps maybe continuously to improve their product, make it the best. Because you see, similar concept for my example is that Microsoft versus Linux, when I said that Linux maybe product is much better than Microsoft, for example. Right. So, but if you think about it, if Microsoft product is all constantly about a mouse gap apart from the next competitor, chances are competitors may lose out to Microsoft based on product superiority. So it's the same for Datadog. The second thing is price, but I'm not generally very keen on price war, because how much cheaper can you go? Right, the cheaper you go into cutting your price down, you are actually affecting your margin. So how much cheaper can you go? That's the question that I always ask myself when it comes to price war between industry. So I think explained a bit about ARR and what does it makes. That if you take a look at that, you can see that in terms of second quarter 2018 to second quarter 2021, you can see there's this huge jump in terms of the ARR. And I also want to draw your attention to the different so-called boxes of that makes up the whole ARR. So if you can see in second quarter 2018, customers, there are more customers with just one Datadog product compared to two or three. But if you compare it to second quarter 2021, you can see that there are customers having 4 or more products with Datadog. Is quite huge, quite significant. So this draws something, is that not only Datadog is able to retain customers' usage on their product by perhaps providing a much more superior product to them, Datadog is also giving customers what they want in terms of the massive number of products that they can offer to the customers to suit their needs. If they don't, it's almost very hard to have such a huge jump in terms of more and more customers using 4 more products you can see from here. Alright, so this is something that is very powerful, that I personally like to see whenever I invest in a SaaS business company. Okay, I hope this gives you some understanding on that. Of course, now I also mentioned that as an investor, it's always our duty to extract, to read up all their quarter earnings, to understand what their businesses is all about, where are they in, how their management position themselves to be, and so on. So I read through the third quarter 2021 highlights, and these are my comments. Right, let me just shift myself away again. Okay, so these are the few key highlights that I have gotten upon. The first thing is that the dollar-based net retention rate continues to be over 130%. So what does what does dollar-based net retention rate mean? So basically what it means is that how much money the company is able to retain across the year or across the quarter per se. So if it's 130%, it means to say that the more and more customers of Datadog are spending money with them. Okay, so I always want it to be as high as possible, but definitely it must be way more higher than 100% if you ask me. In fact, anything close to 100% is not good enough as well, because a lot of other SaaS companies are having way much higher dollar-based net retention rate. So this is something that we all have to understand what's dollar-based net retention rate all about, and understand that the higher percentage means more and more customers are pumping in more money to Datadog. Okay, so for security, of course, they also said that they are moving into security with their cloud security platform. So it's something that I want to see, because if you understand that Datadog has always been introducing new platforms, new products to their customers, so now they are moving into security. It's pretty tight, or rather it's pretty congested space in terms of security, but I would like to see how much more are they going into. The third point is that their focus remains to invest aggressively in R&D. Yes, you can say it's like a motherhood statement, but I do see some similarity here. Is that look, they are going into cloud security platform, right? But then at the same time, they also have to invest aggressively in R&D, because if you don't invest aggressively in R&D, you will not be able to give a superior product in the cloud security platform by itself, unless it's luck or by chance. But this is how I look at it. And of course, and to go to market to optimize for the long-term growth. So we shall see whether or not are they catching up with whatever they say, right? The fourth point is that they have crossed the milestone of exceeding 1 billion in ARR in the third quarter. So I think the previous one was second quarter, but yeah, basically they've exceeded 1 billion in ARR, which is really quite remarkable. Okay, and just purely quarter three itself, they have 40 new products related to quarter three. Okay, so you can just see that they are really issuing out more and more new products to suit the different customers' needs. Of course, they also give some guidance where they say that full year revenue it's in the range of 993 to 995 million. Of course, the good thing is that they are free cash flow positive, with a margin of 21%. So it's something that is pretty good for Datadog at the start now. So I have also extracted some of the info and came up with my own valuation table. So please take note, this is not any recommendation to buy or sell. It's purely just for me to share with you guys my thoughts, my workings and stuff. So if you can see, based on the recent close, it's about $140 in terms of share prices. Of course, I've put in a few models, like I used 993 annual revenue, okay, based on their guidance, which is around here. Of course, FDSO is more like the number of shares outstanding, so you can just Google about it. I also put in a 25% free cash flow margin. You could use 21%, but I feel that they will. I do feel confident that they can hit 25% free cash flow margin in soon. So basically, this is how I work my model. I assume a revenue growth rate of about 70% with a decline on year-on-year basis of about 10%. So you can see, year 1, year 2, year 3, 4, and 5, all the way until the end. Is you can see there's a tapering down in terms of the growth rate. Of course, if the company surprises us and grow further, grow better, that is the perfect thing. But for me, I just wanted to be more safe, so I just decided to retard their growth rates on a yearly basis. And you can see that the last intrinsic value works out to be within the range of about $77 to about $100. So that's the range. Currently, the share price is $140. Based on this, it's kind of overvalued at this moment. So yeah, that's basically, it is what it is. This is the valuation model. Whether or not do you think that it's undervalued, overvalued? I feel that valuations, although it gives you a guide, it's not like a direct buy to sell indicator. A lot of things also boils down to whether how much do you understand the business, understand the macroeconomy, where it's going. So while you have a guide, alright, it does give you a lot of benefit, because what if one day the share price falls to within $80? You just know that it's pretty much safer to get in compared to now where the price is $142. So this is generally how I use my valuation table to come and give me some clarity on whether or not should I invest in any companies, right? So I really hope you have enjoyed this whole video on Datadog. It's a very short update because I just didn't want to cover what other investors have actually been covering on YouTube. So I just tried to give you guys a different perspective and to see whether if I could help you guys to be a better investor here and there. Alright, so with that, I really hope that you've enjoyed my video. If you could, don't mind just drop me a like as well as a subscribe to my channel. Right, and I really hope that you guys could comment below to see if there's anything that you want me to cover, or if there's anything that I can improve upon. Okay, so with that, invest safe.